Welcome back. Now we're going to talk about our profitability ratios. They basically tell us how profitable is our company. So let's go back to our ratios. And we have two profitability ratios. So one is our profit margin. So we're going to start with our net income, which is on our income statement. And our net income is right here. 11,083. It's actually 11,083,083, but that's okay. For some reason that didn't want to be a proper number. And then we're going to divide by our net sales. Net sales we already have here, 309,506. So our net income divided by our net sales, we'll take our net income, divide by net sales, and we're going to make this a percentage. So 28% of our our profit margin is 28.05% or 28%. That basically means for every dollar we sell, 28 cents is profit. Again, is this good or bad? I don't know. You have to look at what was it last year? What was it the year before? What are our competitors making? You have to look at all of these ratios in context. They are not standalone. You can't make a decision just by looking at the raw number. Okay, our second profitability ratio is earnings per share. And this tells us, if you look at total earnings, how much goes to each shareholder. So we're going to start with our net income, which we already looked at. So that's 11.083. We're going to divide that by our weighted average number of shares outstanding. So I could teach you a very complicated way to figure that out, or we could just steal it right off the income statement. So we're going to go with the income statement route. And if you look at the very bottom here, it tells us the weighted average common shares outstanding. There's basic and diluted. We are only going to use basic. So I'm going to highlight our basic weighted average common shares outstanding. And then I'm going to take our net income and divide it by our weighted average number of shares outstanding. And I get $3.05. So for our net income, each share, when you divide our net income by basically the number of shareholders, each shareholder earned $3.05. Again, good or bad? I don't know. Look at the competitors. Look at the what it was in prior years. Now, I'm going to show you this little trick, just so you know. If I go back to my income statement, they actually tell me my earnings per share. So I didn't have to calculate it, but I want you to know how to calculate it. So that's why I showed you. But you can always check your work, go ahead and calculate it, and then make sure it matches the number that's reported on your income statement. Okay. Going back to our ratios, we're just going to do the last category. So those two are profitability. This one is market potential. This is the price to earnings ratio. And the price to earnings ratio, again, you can't look at it standalone, but it really gives you an idea of how, it can give you an idea if your stock is overvalued or undervalued. So our earnings per share, we have already calculated. So that's good. And then we need our market price per common share. So this is going to change the entire time the market is open. But let's go ahead and we'll open Google. Let's open a new screen. And we are going to type in Oracle stock price. I can also look this up on my phone. And the last stock price that we have for Oracle, oh my goodness, why did that go away? Let me see. Back, here we go. The last stock price we have for Oracle is $47.93. So this is going to change. When you put it on here, just tell me when you did it so that I can check. So what did I say? Now I've forgotten. I said it was $47.93. Okay. So our market price per common share is 47.93. Okay, and I'm just going to put myself a note here that I looked this up on March 14th, 2020. Okay, so now if I take my market price per common share and divide it by earnings per share, this gives me my price earnings ratio. For Oracle right now, it's 15.72. And this is where you want to look at competitors. So if I looked up the price earnings ratio for Oracle's competitors, maybe I'd look at SAP, or I'm going to actually pull this up so you can see me while I'm. All right, so I'm going to look at Oracle's competitors. I'm going to maybe look at SAP or Workday or whoever else Oracle says is their competitor, and see what their price to earnings ratio is. If their price to earnings ratio is much higher than Oracle's, then Oracle stock may be undervalued. If their price earnings ratio or PE ratio is much lower than Oracle's PE ratio, then Oracle stock may be overvalued. Now, don't go out and fancy yourself a day trader. You have to look at a lot of other things. Never make a decision based on just one ratio. But if you find that a stock that appears to be undervalued, meaning it has a lower PE ratio than its competitors, it's a good place to start looking. Maybe there's a reason why. Maybe they don't have as much market share. Maybe they just lost a big customer. Or maybe it's an undervalued stock and an opportunity to make some money. I am not giving you investment advice. I'm just telling you a place where you can start looking. Okay, so that was, let's just pull this back up so we can look at it one more time. So that was our PE ratio, and that is our market prospects ratio. All right, so that concludes our ratios, and it should give you everything you need along with the other videos posted in this module to do the second assignment in the group project, which is your financial statement analysis. I can't wait to see what you come up with.